What's up, Rad fam? Welcome back to another episode of the Rad DAO podcast. Today, my guest is Scott the Investor. And what does he invest in? Well, you're just going to have to stick around to find that out. But before that, I need you to make sure that you're subscribed to the YouTube channel, you smash that like button, and then you mosey over to your favorite podcast app and leave me a 5-star review. We talk about everything today, from commercial real estate to DeFi to YouTube content creation about crypto. Scott does it all. So with that, let's get into episode 9 of the Rad DAO podcast. Let's go. No, it's good to see you sort of not in person, but in a bigger box than I usually see on your YouTube videos. So for those that don't know, Scott manages what appears to be a very successful DeFi-centered YouTube channel. And he's got a lot of interesting stories. He's in a lot of interesting projects. And I wanted to get him on here to kind of talk through, his crypto journey, because I think a lot of people are curious about the people behind the camera, how they ended up in the chair that they're in. So Scott, who are you?
Well, broad question, but so I live in Salt Lake City. I've got I've spent a lot of time in corporate America. I've got kind of a traditional financial background. I went through a lot of courses and stuff to trade stock options and all that. So that's kind of what really got me into investing first off, as well as real estate and stuff like that. So I spent a lot of time in the commercial real estate world doing commercial real estate deals. And so just investing in assets that will have a greater value later is kind of my forte. So crypto came along and it was just super speculative. And so, I wanted to learn about it and try to figure out how to make some money, jump on the train, because I was starting to hear about it. So I actually got into crypto, I think I just went back and looked, mid 2016. And that's like when I bought my first Bitcoin. I bought a Bitcoin for like $600. And then when it hit 1,200, I sold it. I was like 100% profit. Yes. But when it hit 69,000, I was like, maybe I should have hung on to at least half of that, scaled out of my position, but we live and learn. So 2016, I started buying my first crypto. Of course, like Bitcoin was first because, it was the first time you could really, Bitcoin was really accessible to the masses. Coinbase came up, it started offering it, and then it started offering Ethereum and then Litecoin. And for a while, there was only those 3 coins. And so it was the first time. I wasn't a tech whiz or anything like that. I didn't know about different hardware wallets or any of that stuff. A lot of that stuff wasn't really prominent at that time. But I got in, started just kind of trading it, speculating a little bit. Saw a big peak. I bought some Bitcoin and then Ethereum and Litecoin. When some of those doubled up, I sold the Bitcoin and the Ethereum and everything, and then everything started to take off. So it took off towards 2017, and I was just kicking myself. It took a dip, and I bought again. And then everything skyrocketed. So that was my first taste of actually making pretty good money. I sold most of my assets pretty close to the top in 2017, right before everything crashed in early 2018. So I was super lucky. I mean, it was dumb luck, but I was excited to have made that money. It was such a weird world back then. I remember when I went to transfer my first amount out of my Coinbase account and send it to my bank account, it got lost. It was gone for months. And I was like, it's gone. I'm like, my wife's like, it's a scam. Bitcoin's a scam. Like, this stuff's all fake. And I was just like hoping at some point they'd figure it out. And eventually they did. And like 3 months later, I had like that $4,500 in my account. I was just like, it was just super weird. So it was some sort of weird routing issue. Banks back then were like not accepting anything from crypto exchanges or whatever. So you could get your account shut down easily by transferring some, trying to off ramp some crypto into fiat. So anyway, went through that kind of wild world. Everything took a dip, started buying a bunch of altcoins, had a original Binance account before they made it most illegal in the US, And so I remember when they forcefully said, if you don't transfer your assets off, we're going to lock them down because you're not allowed to have this type of platform, the old school app in the US. So I had to kind of go through that process. And it just kind of went from there. And then DeFi more recently. So I've just been a buyer and a holder, and trying to sell when I made good money and just kind of trading and exploring projects. But DeFi came around probably, I don't know, close to 2 years, maybe 2 years now for me, pretty close to that. I think early summer, so about 19 months ago, 20 months ago, something like that, is when I really started to get into DeFi. All the stuff I was getting into was miners, super high risk plays, 14% daily ROI, 7%, just super high risk, Ponzi-nomics, first in, first out. So that's the stuff I was getting into for a long time. Some of my friends were trying to tell me, hey, buy into this project called Drip Network. It's paying 1% a day. It's rock solid. It's been running for a long time. And I was like, man, I'm getting 7% over here, so I can ROI fairly quickly. It's going to take me 100 days to ROI over there. So I just kept putting it on the back burner. And they were like, hey, when they first told me about it, it was like $7-8. And then, it's like 14. And finally, I started doing some research, and I realized like, oh, it's set up completely different. It's not set up the same way as these other ones at all. So finally bought in at like $50, and then from then on, my DeFi journey's just kind of been all over the place. That's when I really started building my YouTube channel and getting into it. I know that was
Drip. I was definitely somebody's exit liquidity when I was buying in around 80, 90, $100, but I DC it all the way down, so I averaged out pretty well.
Nice. Yeah, that's awesome. That's what you got to do. And part of it is like just the learning experience, like you never know. Like people would say when it was at 150, people would be like, what, can it keep going up? I'm like, it could go up to 300 and then pull back to 150. Like you never really can tell exactly how much the contagion will catch on. Could have gone to 500 and then pull back to 300. And then your 150 buy would have still been, 100% ROI. So you just kind of got to, get in if you feel confident, be willing to DCA, and then just the space moves so quickly, you got to just pivot all the time, right?
I mean, if you were looking at market, like by market cap at the time, like it wasn't out of the question to go to those kind of crazy numbers, right?
Totally.
You saw Hex go to what, 50 billion or something. Doge was up there, like SHIB, SafeMoon even went into the billions. Like there was lots of reason to believe that any project could touch a billion market cap at any point, right?
Totally. Yeah, I completely agree.
So I'm curious. You got in 2016, so you're like OG then. Like you're newer than, or you're more OG than I am in the crypto space for sure. Did you maintain your diverse basket of assets though, or did you go balls deep in crypto? Because I think I'm just gonna pepper this with my opinion is that a lot of people made the mistake of going all in on crypto, at the wrong time. And I think diversity is key. But I'm curious, how did you handle it?
I did diversify actually.
Good.
So I was pretty well diversified, mostly because during that time in my life, I was doing a lot in the stock world, teaching some financial education courses, teaching people how to trade stock options on the more conservative side, which no one does, sell options instead of buying them. And so credit spreads, things like that are only getting you, you're looking for a smaller percentage per month and then try to be consistent with it. So I was doing a lot of that. And so, of course, since I was teaching it, I was also doing it and doing it live and everything. So I had, of course, like my stock portfolio, still there. Also done a couple rental properties. So I had that going on. And so, yeah, I was always pretty well diversified, mostly because I actually knew about those two categories. And then crypto, I was just like going to the Google, trying to figure out what information I could pull, what projects were good. And whatever article you read, that could say that a project was the worst ever, or that it had the greatest utility that was ever, going to come to crypto, like an XRP or any of these other things. So I spread a bunch of money, even some that I made during that early run across, 50 different altcoins, or probably like 20 realistically, but a ton of altcoins, that I had dug into, and just in hopes that one of them was going to kind of be the next best thing. And then we saw that, 2-3 year period where everything really flatlined. And so everything just got quiet. I held those assets. And during bear markets, as you know, there's going to be some that are going to last, but 80% probably just going to die, dwindle away, which is basically what happened. So, then when the next bull run came, I started to DCA back in and really kind of get in. What I would have done better had I known that I'm doing this bear market is just continue to DCA and then just build my portfolio all throughout the bear market. So I don't know exactly what kind of downtime we're going to have here, but it could be 2 years before we hit another bull run again. I'm just going to make sure I'm accumulating the entire time. All the assets that I like, I'm going to accumulate. I'm going to realize that, half of them may go to zero, but the other half, when the bull market swings back in again, I'm going to 50x some of those positions. So
yeah, I think that's exactly my strategy too. And I think honestly, it's way lower stress than trying to time everything and try to find the swings in a basically what's called a flat market. I mean, I know Bitcoin's over 19K right now, but this is the first time in 3 months that it's really moved beyond a few $100 range. So it's peace of mind. You find the teams that you like, you find the projects you're willing to invest to, and then you just build your bags. And everybody that I had talked to that had sort of been through the previous round and actually made their money that's all they did, right? They kind of got lucky on one, but you write off the rest and you're good to go. So
that's exactly. You just got to sit tight. And there's some other DeFi projects that are like less passive. It's less of the buy and hold. Obviously I'm in a handful of those, but yeah, part of it is just finding the projects you're really going to like, seeing what happened last cycle, realizing Bitcoin's probably going to easily break 100,000 on the next bull run. And if I buy in at 20 or 15 or 12 or whatever it goes down to, if I hold that, I can whatever X my money. And the thing is with, it's no different in stocks. It's just way more volatile in crypto, right? So whereas a super bad, pull down like we've seen in the stock market be like 25%, it's 95 in crypto. And so, but also when stocks rally and things are taken off, that's a nice upside. But when it happens in crypto, you can 1000x in some crazy positions, especially when they just drop one partnership or you get Elon on your side tweeting. I mean, you could turn $1,000 into $1 million like that. And it's realistically, it happens all the time. So you just got to be in a position to where you're diversified enough, you're holding some of that stuff and you're waiting for that run up, but you have to be able to stomach an intense downside. Like right now, everyone's getting wrecked, talking about how crypto's the worst mistake they ever made. And being through this before, I'm like, this is the time. It's the perfect time. You want to buy assets when everyone's like running for the hills. Everything's a scam. Everyone's trying to walk away from it. Perfect time to accumulate.
I was talking to a guest a couple weeks ago, and he was talking about options trading and just human psychology in general. And it's amazing to me that we could have such hype and such density of people in the space in 21 and like 22. And now nobody's here when everything's on fire sale. You can clearly look at what's going to make it and you have a pretty good indication of like the teams that are there that have the cash flow to bankroll a couple years worth of down market, right? So like it's, everybody wants the gains, but they don't want to work for it. And it is work, right? It takes a lot of effort to research these projects and to engage with their communities and to stay up to date on what's going on and all that stuff. So I'm with you. I think people are missing an opportunity right now to DCA into whatever position they want to be in and to hold it, because
totally
they're gonna come back, but they're gonna be buying at 2-3x the price that things are now, right? And that's
totally and that's if they're kind of getting in early. I think the safest bet, and this of course is not financial advice, but if you're like wanting to get into crypto but you think it's too risky, you got to look at the upside potential of any other investment that you're going to make right now, for the most part, including real estate. If you put in 10K or whatever it is, in 3 years will likely be maybe somewhere breaking into a pretty serious bear market, should be. That $10,000 investment could be 10x easily. So you just got to look at that upside. And if it's an investment in like Bitcoin, it's something that's very stable. Listen, if Bitcoin goes down and Bitcoin goes away, all of crypto goes down. Bitcoin's gonna be the king until something eventually takes over. But we're several years down the road from that. It's gonna have to have a ton of utility, but still Bitcoin's always gonna be at the top. So if for some reason Bitcoin goes down, crypto goes away, and we've got a lot bigger problems on our hand than just, trying to make money on these investments.
No doubt. But I'm still bullish on the space, in spite of all the negativity that exists right now, in spite of the low engagement across pretty much every community group or social platform that you can name. It's the people building now. It's the people that are laying the foundation for what the next wave of crypto is going to look like. And that's, we're basically, you and I run shows about, what the internet was in, 1998, right? We're talking about all the cool things, and some of these are going to work out and some of them are not. But, I'm just fucking fascinated by the whole space and by the players and the actors and the different projects. So that's why I do what I do. But I'm curious, like, obviously, it sounds like you were an educator in the finance world before you got into crypto. Is that sort of what led you into the idea of content creation? Like, how did you get involved with YouTube in the first place?
Part of it was that. So I'm not comfortable on camera. I don't like being on camera, despite what you may think. But it's you know what I mean. It's just you get used to it through repetition, and so part of it was just that. So I was what stemmed it is I used to teach all these classes in person, and then when COVID hit, there was no in-person anything going on, especially group classes and all that. So we decided to spin our business model up and record all these sessions. So then I'm like, okay, we're going to do this. I got to learn about filming, lighting, editing, all that stuff. So just basically went through the crash course of, however long it took me, 6 months to a year to get good enough to make good looking content. And I put together the course that was able to be online rather than me teach in person. So that's really was my first soiree into content creation of any type of any type. Some of that information I would leak out onto a YouTube channel, just as like some teasers and stuff. I would post a few things on there, but I never really considered pushing the YouTube thing very hard. It just wasn't on my radar. And then when the Drip Network stuff was originally taken off, people were just hitting me up. Hey, can you walk me through it? Can you walk me through it? And so I was spending one-on-one time with all these guys, and it was just taking forever. I mean, you take a newbie who's maybe never bought crypto before, or if they have, it was on something simple like Coinbase, and you got to teach them how to set up a MetaMask wallet and get them a crypto.com account and transfer and whitelist that address and all that. It's like a 2-day process, 90 minutes each day. And so, after I had done 30 people or something, I'm like, some of my friends were like, dude, just record it, throw it up on YouTube. So I'm like, okay. So I just recorded a video. Hey, here's the basics of the project, and here's exactly the steps you want to take to get in. And then that first video got like 20,000 views. So I was like, okay, there's a demand for this, right? There's a demand. And it was just everything was kind of peaking right then. Even though Bitcoin, everything was coming down because it peaked in November. This was more like January, February of last year. And so there was a lot of interest, a lot of search volume and all that. So I got lucky on my timing. And then I just, people kept hitting me up. Hey, great video, so I would make another one that was an update, and then another one. And then I'd make a video about another project or whatever and sprinkle that stuff in. Eventually I kept getting views, people were after it. And so I'm like, all right, I'm gonna try to get better at this. And I started getting ingrained into with members of the community, started, getting some friendships in the community, and then just decided to stick. Now, I get requests for different videos all the time, and, just all sorts of specific stuff. So I'm trying to make sure that I'm feeding the audience, and it's good. It's challenging. Like you said, it's a really hard time to grow a channel. Like, no one wants to search crypto. No one's searching it. So to be able to get a few thousand views on a video is helpful. And a lot of that I would attribute to the Drip community, because they're ready for the updates. They want the updates a couple times a week. They want to watch those videos. Whereas most of the other crypto stuff isn't quite as popular because everything in the space is high risk. So unless you're part of like a community, they're more the one-off individual. So that's what got me into it. And yeah, that first video just spiked. I'm like, let me go ahead and just keep making these. And then I just would try to make them a little bit better and a little bit better. I was a little bugged by my first few videos because I filmed them here, and I didn't have quite the right setup. All my stuff, all my equipment is down at my downtown office, like I was telling you, where we would actually do the studio stuff and film everything and make it look amazing. And this isn't set up quite like that. So I had to switch some lighting out and stuff. So I was a little bugged by the presentation of some of my earlier videos, knowing like I've got all the knowledge to make this look amazing. I just need to figure out how to actually fit it in this room and move things around. So ended up going pretty simple with just this setup that I've got now. And I want to upgrade. Like I was saying, I like your setup a lot. I like the depth of field, the coloring. I mean, everything looks great. So it's just going from there. And then this year, 2023, I'm just trying to double down. More content, more interviews, more stuff like this. it's just I think if you build in a bear market, channel or portfolio, it'll pay off down the road. So I'm just,
that's encouraging to hear, because this is a very young podcast that launched the week FTX decided to implode. So in terms of, launch characteristics, I don't know if I could have picked a worse time, but hey, we'll grow it. But I read a book. It was actually Joel Salatin. I was into the homesteading thing for a few years, grow your own food, teach your kids, all that sort of thing. And I still live by a lot of those principles, and I have those values. But I read a book by Joel Salatin called You Can Farm. And one of the big things is good enough is perfect. And I think doing something and putting as best as you can without getting too stressed about it being perfect is way better than not doing anything at all. So 100%. I kind of took the same approach. Like, my first few videos look a lot different than this currently does. And it's just a matter of tweaking things and constant improvement. So I'm trying not to sweat kind of what those looked like. And I don't think you should either, because I think this is how we grow.
Yeah, I appreciate that. I'm a perfectionist by nature. So I have to, and have always had to, like, as I started to develop more in the, in like the corporate world, I started to realize that, like, I just got to cut things off. Good enough. I got to cut things off and then move on to the next project, because my cutoff point is better than 99% of everyone else's. So it's still better. People are still going to be like, oh, this looks great. I just have like I've got an issue. Part of my job in the real world is very interesting. It's a lot of consulting, but it's in very different categories. Some of it in e-commerce and different areas of marketing, and some of it in commercial real estate, just because I've got the experience in it. So firms contract me, I should say, to do segments of work for them and everything. But a lot of it is some of it times I'm building the ads and everything, and some of them are really involved and real specific. They match the music and everything. So I get into that, but that's this type of stuff too, that it's got to be perfect. If the beat doesn't drop right when that transition makes in the video and all that stuff, like, that's the type of stuff that really just, eats at me. So I'm trying my best to make it as good as possible. And then eventually I got to close it. I got to save it and say, that's it. I could spend another couple hours on this, but that's how it goes. It's also the 80-20 principle, right? The Pareto principle. Like, the value is going to come out of the 20% of the time you're actually working on it. 80% of the value will come. So I just got to get better at that.
Well, at the end of the day, I look at some of the bigger brands in the content creation space in general, and it's about the people. It's about the people and what they say. It's not about the polish that you put on it. It helps, certainly, especially if to kind of capture newer audiences. Looking at something that's very appealing, is more attractive to them. So I get it, but yeah, we'll be fine. I think, when the content, when the people flow back in, this will all flow naturally. And
oh yeah, and when you've got a good amount of views and you've got a substantial enough amount of subscribers that you built over time, people won't dismiss you because you have 20 subscribers. You know what I mean? You have enough to, like, get past that threshold. There's just these psychological barriers you got to break through. And then if people check your stuff out, I'm like, oh, this looks really good, or the audio is really good, or, the collaboration seems really solid, then people will just latch on. And I do think once we start to gain some traction in crypto, whether it's this year or next year, not even necessarily like full bull run, I think a lot of people will start pouring back in and start being interested. And I think our channels will 3x or 4x in subscribers fairly quickly, because a lot of people saw that type of success. I've got several friends in the space, some I've done interviews with, that have, 30, 40, 50, 60, 180,000 subscribers. But they get about the same amount of views on their content as I do.
Yeah.
And it's just because they built it like right in the peak of everything. Tons of people were following those channels, and now no one's watching again. They're still subscribed, but they're just not watching because they're trying to stay away from the crypto content because they got burnt, they bought tops or whatever it is. So I think we'll be the beneficiaries of the next bull run.
For sure. And it leads me to a question that I wanted to ask you, is sort of I know that your foundation was Drip and sort of the Forex ecosystem in general, and that's where a lot of your audience was, involved in. But there's a lot of other stuff out there now, and as you sort of try to bring more content and more great projects, what's your vetting process like? And the reason I ask is because we've seen a couple pretty sizable rugs in the last couple of weeks. I'll date stamp this for our audience. It's January 13th. So this week, I think we saw two that were like people heavily invested in, but YouTubers got involved. They were asked to promote these projects, and then people invested based on, the recommendation of, nobody's offering financial advice, but we do sort of have this responsibility that we're bringing something to our audience, that they trust us, that we've done some level of due diligence, and we do. But what's your process like when you're thinking about a new project?
So my vetting process, first and foremost, if I get sent a project to look at, I dig into it first to just see, is this something I would even be involved in? I'll never promote something that like I wouldn't be willing to put money in. I'll talk about sometimes like, hey, this project looks interesting. I don't know if I'm getting in, but if I'm going to kind of pitch it like a possible scenario for people, I want to make sure that like I've got money in too. So if we get rugged, we all get rugged. I also have a like prerequisite that I speak with the developers. Like I got to speak with the team. I got to ask questions. I got to get a feel for them. I've had multiple times where the team just seems shady or just like can't communicate with me well or answer the questions I want answered. And the spidey sense goes off and I just decide to walk away because there's hundreds of other projects I could be involved in. So that communication back and forth, and most of the time, what other projects have you done? Most of the time we'll throw out like some references or something if we know mutual people, whatever it is. So talking with the team is definitely super important to me. I got to make sure, I don't know, there's certain networks I don't like to do stuff on. My favorite, of course, is the Binance Smart Chain. So I gravitate more toward that just because of ease of use. I kind of know it inside and out. There's other projects on other networks that I shy away from a little bit. I mean, there's a handful of things as I go back and forth, but it just depends on each project. How fast can I ROI? If I can ROI on something within 30 days or real close to it, that's a plus for me. And if the project is, and this is catch 22, it's kind of a interesting dichotomy here, but if the project is older and been around for a long time, it's more established. You realize, hey, this thing's probably not going to rug. But if you get in late, the likelihood that you'll lose money is higher, right? So for me, I just take the risk of I want to get in the first 4 weeks. Like, if it's much later than that, like I've had people bring me really good projects that have been around for a couple months, and it just like, the scales tip for me a little bit in the wrong direction. So I like to get in if I can in like the first week. I like to be able to ROI if I can in roughly 30 days. And then especially if there's like some mechanism where you can pull your initial seed capital in 30 days or anything like that. And then I just try to let my audience know the intention is to ROI quickly and then play with the house money. So don't treat this as a long-term play. I mean, there's certain plays out there, just a couple, Drip Network, for instance, where I think you DCA over time and you build up and you compound and you delay your gratification. You find a good time to take profits. In most of the other plays that we're playing right now that are structured to do shorter term, this is in and out. Like, get in, get your ROI. And then if you've got some profits on top where you want to reinvest and see how long you can ride the train, then do that. But, I try to make it very well known that these are high risk protocols and do not put in money that you can't lose. Like, we're basically gambling on this stuff. And I'm just trying to stack the deck in my favor, going, okay, I'm going to get in early. I'm going to put in this amount of capital. I've timed out the amount of time that I'm going to be able to get out. And if you get in on the same day I do, if you want to, then we're going to ride that same train. And hopefully in 30 days we've ROI'd, and then, everything after that is gravy. So it's just kind of that thought process, but I really try every video, if I can, to just explain the risk to people, because people don't listen. They see the upside, but they don't see if they lost $1,000 and they see me say, do not put your rent money in here. So they put their car payment in instead, just stuff like that. And it's, some people are young or some people get caught up by the hype. So all I can really do is make sure that I'm putting my money in it too, and that I've vetted it enough to where I feel like, okay, like, I don't think I'll lose it. I think I'll at least get close to break even, if not make, a reasonable profit. And then I just spread my risk out a little bit. I'll do a few different projects and see where they land. But it's a really tricky space to be in, especially like, as an influencer, because people will take that ride with you. And so you just hope that they understand that when you say super high risk, like don't put in money you can't afford to lose. You hope that they listen.
I think that's all you can do is really just qualify it about where it is on your spectrum. And if
Yeah.
you're calling something high risk and we're like deep into crypto, then it's probably extremely high risk.
Yeah,
So
totally.
I had a friend who also went by something the investor, and he had a theory. He's like, I just put $300 at everything because if one of them takes off, it'll cover the losses on the other ones. And I'm like,
Yeah.
I guess that's a
Yeah.
strategy.
That's how I would play, generally speaking, like meme coins and all the
Yeah.
smaller, altcoins, is I would just splash some money in, reading a couple articles, knowing that the project's going to be the best thing that ever happened. I'm like, you know what, you're basically buying long-term lottery tickets, and there's a chance it skyrockets. It's 1 in 100, so it's definitely better than odds in the lottery, but you might have to wait it out too. It's not like, that's what people I don't never understand in any market, is that sometimes you got to make that investment and sit on it for 3, 4, 5 years. You can't predict the timing. You just got to make the call, put the money in, and then almost forget about it. Keep tabs on it, but just stop checking it. Stop thinking this is, all of a sudden you're going to wake up and have $1 million in there, and then just wait for the next bull run or the next big development or whatever. And then when the profits are there, something else everyone forgets. Like right now, if just as another example, Drip Network price is low, and so everyone's selling. What's going to happen is some new developments are going to come around. That price is going to turn around, and instead of people selling, they're going to, it can go higher, it can go higher, it can go higher. So they hold. So people generally, happy to sell at a loss, but want to hold when they're in profit. It's like when you're in profit, take some profits, get yourself back to at least a break even point, and then your stress goes away. But for the most part, big chunks of your stress go away. So
I'm in a bunch of Telegram groups, as I'm sure you are too. But the one I hang out in regularly is a degen group, but they're great guys. It's just a bunch of friends that throw small dollars at random shit, and I've watched them all lose money pretty consistently for the last 3 months, because I would say over half of these high risk projects end up rugging or just failing, right? And I haven't been participating really, but I'm like, okay, new chat rules. 1, if you're tempted to take a screenshot of your gains and show it to somebody, then it's time to fucking sell. And 2,
right.
if you're already up big and you think it's just getting started, it's time to sell. Okay, at least take profits, at least pull your initial. So I was like, all right, I'm going to issue bans now. If you're up 3x and you don't sell or pull your initial, then you're immediately banned from this chat, and it's for your own good.
Yep. Exactly.
Because people don't know. They think anything can go on forever. And in some cases it can, but this is not the market for it, right? And if it is going up, it's either a honeypot or liquidity is so low that when you do get that $1 million in your MetaMask, there isn't $1 million in liquidity. Like, people don't understand. Just because it says this number doesn't mean that you're getting that number when you go to sell, right?
Yep. Yeah. I mean, that it was even in much more liquid markets, that happens all the time in the stock market. And that's why when I would educate people, we'd be talking about penny stocks. I'd be explaining how penny stocks work, and they'd be like, yeah, I want to get in and trade more because I can get 10,000 of these for $100 or whatever. I'm like, you just don't understand. When you catch the upside on those, there's no buyer on the other side when you go to sell them. So your liquidity is non-existent.
It's a zero sum game. The old wag me hashtag that everybody used, we're all going to make it, is it's not true, or maybe it is true over a longer timeline. But if you're winning and I'm on the other side of your trade, then I'm losing. And if I'm winning and you're the other side, then you're winning, or you're losing rather. So
yeah. In a lot of ways, any type of investments like this are a zero sum game. You've got a winner and a loser. So no matter what time you get into any investment, you're always someone's exit liquidity, unless you're the first person in, which never happens. So that's just how it works. And people need to be aware that it's just a constant flow. So you're going to be someone's exit liquidity. So when the prices are up and you can take some profits, do it.
For sure. No, that's the only way to do it. People should treat their money that they throw into crypto as basically gone, and hope that they'll be able to pull out more than they put in one day down the road.
Yeah, for sure. I completely agree.
Well, I'm curious. So you've obviously vetted a lot of projects. You've looked at a bunch of different stuff. What are you seeing as trends? Like I've been seeing the arbitrage bot thing, which I think most of them are bullshit. But is there anything else you're seeing in crypto or DeFi, or what do you think realistically is the sustainable model for a project these days?
Um, yeah, it's a tough one. So the trends lately have been a lot of these AI bots. And I think some of those AI bots trading are going to work for a while. The problem is AI, and you've seen this Chat GP stuff going around. Every AI is getting incredibly intelligent, so they're going to work. They're going to be able to process crazy amounts of data from pre-existing trades, and they're going to be able to make profits on those based on the data. It's exactly what we do as humans. We look at previous data, we draw trend lines, we try to figure out when good exit and entry points are, and we're looking at the indicators. The bot just does it faster. The problem is that won't last very long because the bots only have an edge for so long. The more bots that are out there, then there is no edge, and then we're revamping the market. So the market's going to change now with the bots, just like they did in the past, really with standard high frequency trading. The market's going to drive wherever it's going to drive, and these bots are just going to eat each other alive. And so it'll be tougher for those to make profits over time. So I do think some of these bot trading platforms will do well for a couple months, but I think that edge is going to disappear, and so it'll be the latest trend. You've got your standard kind of miners and stuff like your baked beans and stuff of the world. Those aren't set up to last forever, and historically, most of those are 90-day deals. The ones that are good last 8-9 months, and the only one, I think, BNB miner is the only one that's been around for year and a half or something. So that one's still trucking along, which is just amazing. But they're not set up for sustainability. There's no real utility there. It's just a tool people use to transfer income from one person to another.
Yep.
And you want to catch the right time and everything, but there's no utility. I mean, you got to be honest. So there's a chance that some of those devs could maybe add a few things to it to make it a little more sustainable over time. But in my opinion, there's no daily ROI protocol on the planet right now in the DeFi space that can survive if they don't immediately start building the ecosystem out and finding real utility. And I think we've seen a bunch that were really promising projects go by the wayside, and the good devs, honest people, and the project just crashed. So some of them are straight rugs where these guys just decide, well, there's enough money in there, let's drain the accounts and walk. And that, of course, happens all the time. But a lot of people talk about the slow rug, and I hate that term because I don't think there's such a thing as a slow rug. By nature, a rug pull has to be fast. It's just that by definition. So slow rugs, to me, most of the time are just failed projects. They try and try, market goes against them, sentiment goes against them, everything's kind of going down. You got an FTX thing that happens in there, and just over time, it's the straw that breaks the camel's back, and those guys go under. And it was a good project, and they're going to have to regroup and come try again. So there's going to be a few shining stars, I think, in the DeFi space that are going to create real utility and create real ecosystems to where, the Forex latest idea to utilize a chatbot service that's outside of YouTube, and you can choose how you want to get paid out. Whether it's BUSD, or you can choose the currency you want to get paid out in, and there's a little transaction fee that gets shaved there that goes back into the ecosystem. Really clever idea. There's a handful of other things like real collateralized individualized lending is another one that will be super good. So you don't want to sell the token because you know that you can lend it out. So there's a handful of things I think the developers, the real smart ones, will come up with in the future that will tie everything together. But I think if you don't have an ecosystem, the project just won't survive. And especially in a bear market, because you're not building a big community. You're not onboarding 300 users a day. You know what I mean? You're getting a couple hundred a month maybe, and it's just a slow road. So there's only going to be a couple projects that are going to make it out of this, I think.
Yeah, no, I think lending is going to be huge. I think it solves a lot of the problems of people's sort of new shiny thing mentality, where they just take their gains and then they go somewhere else, where now they don't have to, right? They don't have to damage one ecosystem to try out another one if they so choose to do so, because they can just borrow against their assets. So I think that's something that hasn't been done super well yet.
Yeah,
But I'm hoping Forex Chart gets it right, because he's got such a big following that I think that would be a great sort of proof of concept to really pull this off and do it in a meaningful way.
for sure.
But ecosystem is key, and it can't just be ecosystem of, okay, I'm just gonna take my rewards from here and I'm going to plug them over here for more rewards that I then plug back over here. Like, that's just a circular economy, right? That's not an
Totally.
actual
Yeah.
sort of
There's
utility.
no new
so to speak.
capital ever being
No, and
generated. Yeah.
exactly. So, I mean, everyone uses the word Ponzi in crypto because it's, other people's money, but that's really any market. That's any business, realistically. Your
estate,
business will fail if
anything,
no
yeah.
new money comes in. My house is worth less if someone isn't willing to pay more for it, right? So it's kind of a misnomer. However, external revenue source or connecting this to some other, either completely outside crypto business or something else to fund in and then reward, benefactors, then you're talking about crypto as sort of a venture capital vehicle that is now rewarding its shareholders, which I think is kind of where we need to get to. We need to take a little bit of what we know about traditional finance and apply that to crypto and actually treat it seriously. Because I think a lot of people try shit out and see what happens, but I don't think they take it seriously like they should. And I think, excuse me, part of it is age and experience. You and I both come from corporate world, and I'm not saying we have all the answers, but I'm saying we have a little bit of life experience under our belts now, and we've seen a few things that work and a few things that don't. And we're both passionate about this space, but there's a crop of kids, literal kids, that are coming into this space, becoming developers by age 17, 18, who have none of that experience. And then they try to bring in utility to a project, but they don't understand what that means. So it's going to take this sort of group hug, I think, of all different types of people to really sort of build up this space in the way that I think it needs to be.
Yeah. And it's odd, but you're right. I think some of the older folks that have real business experience need to figure out how to tie it in. And there's a lot of people that ride that line. I mean, I've got some buddies who are, in their late 50s, and they're titans of industry, and crypto is still new to them, way new. It's a hard, it's a hard bridge for them to cross, but they want to. They know something's there, but they want to tie in some of these old world, idealisms. And I think they're completely right. I mean, we need to find a way to use some of the intelligence that's tried and true, very proven in the normal business world, and utilize it in this world, because I think that's where we miss. And there's just a lot of people who don't have that experience. I mean, I think, not to talk about Forex Shark projects too much, but he's a prime example of someone who's extremely intelligent, and he knows exactly what he wants to build in his head, but he doesn't actually have any like straight business experience. He works in the DeFi category and pretty much always has, besides some small jobs when he was younger. So he doesn't have the experience of what it's like to manage a bunch of employees. And when someone's sick and they've got personal things and they need to take personal time off and this and that, right? He's working 100 miles an hour, and he just wants everyone else to do the same. So it's a very much learned experience, to learn how to manage people and talk to them in certain ways, and play to people's strengths, and know when someone needs a pep talk and not, know when you need to come down on somebody. That just takes time. And normally you use that, you learn that stuff in like the normal corporate world. And so that stuff is missing. And then I think a lot of the developers that, he's brought on in the past, he's got some of them, these kids are still in school, they're relatively young. They don't necessarily know what it's like. Like, I mean, everyone has a low attention span. So yeah, they get hyped about this new project that they're on. They work super hard for 30 days, but all the pieces aren't together yet. They're remote. They don't really have to be shown on screen. They just start to lose interest, right? And their big paydays at the end when everything goes really well, and they just start to dwindle. They realize they're dependent on the other developers to get their stuff done, and then you start to lose more momentum, a law of a diminishing effect. So I think that's happening all over the world. So I think just in if you were to look, I guess, at this scenario and this ecosystem and this developer, with a magnifying glass, you just see this exact scenario you're talking about, where we got to find a way to like a Forex Shark could get a chief operating officer that worked in real business world, that understands that side of finance, to come in and say, Here's how you got to structure it, because otherwise it's not going to work. Tie in your intelligent ideas to keep, everything completely decentralized, but you gotta move the pieces around the board like this. I know from experience, because I worked in finance for 25 years or whatever. Something like that would help a lot. We need to inject a little bit of the old world lessons into this, new world scenario we're trying to create with DeFi, because DeFi is not going anywhere. It will just evolve into some interesting things. And if we want to be at the forefront of it, you got to take some of the lessons you learned from the past and apply them to where you're going.
It's challenging though, because, and this is no disrespect to the kids. I want them in the space. I want them leading. I want them, having vision about what they could do. But unless you really go through the suck at some point in your career and stick with it to come out the other side and see what that looks like, there's something in that kind of process that changes a person, right? Whereas I think the mentality in crypto is, well, as soon as it starts to dwindle, you just, I'm out, and then you go to the next thing, and then the next thing, and then the next thing. And it's just, the longevity of projects isn't there, because the longevity of the sort of investment and the intention of the development team isn't there. And that's not, I'm not talking about anyone in particular. That's not true about all. I've had some great teams that are building for the long term, but
it's probably 80% realistically.
Probably.
Almost a quick kind of cash grab. They got a cool idea, but they're never thinking, how can I ecosystem this thing out and have it be here in 5 years?
But there's always going to be the shitcoin world. Like, people are going to ape into whatever to try and get their overnight million. And that's fine. I'm guilty of it too every once in a while. It's not a bad thing. It's part of the space. Yeah. But people coming into the space are going to want to park their money with teams, with known, trusted teams that have a track record of success, that have been there when the chips are down, supported the community throughout, and come out the other side. Like, I think we need some history now. I don't think the undoxed complete dev team is going to be a thing in 3 years. I think people are going to, require more from the basically businesses that they're investing their money into, right? Yeah, I think so. It's tough because you got the SBF situation with FTX, like fully doxed out there in the open. You know what I mean? It's clear that if someone wants to rip people off and commit fraud, they're going to do it at any level. They don't have to be anonymous. So it doesn't necessarily change things. But I think for you to get any real outside investors in and big money, I almost think you're going to have a docs team for people to be able to get enough information out of them, see people face to face, bring in these guys that are bringing in, $5, 10, 15, $20 million into a project. In order to do that, they're going to have to be doxed. And what's going to happen is all these developers in the decentralized world are going to say, no, we're not going to do it. And we're going to reach a threshold where there's enough regulation or whatever it is, enough structure there to where bigger investors and larger capital, institutional capital, can come into the space. And Wells Fargo is going to set up something like it. It'll be a lower yield because they want to make more profits and keep them for themselves. But they'll set that up, and they'll be, fully transparent, publicly traded company, and investors who normally would, could maybe go into some of the spaces we're in, will go there because it's a trusted name. They know about it. They're going to dump their money in there and take the risk there. So it's that tough balance between wanting something that's decentralized and trustless and just having a closed loop system, and then also having something that's established. And it's tough to do. It's tough to convince people to cross that road, right? Like, I think both options are going to exist in some way in the future. We have to, right? Because I think a lot of people came in for the decentralization and then realized quickly that it's also a cesspool of scams. So they want the centralized experience, and we're going to have corporate Web3. That's going to be a thing. Like, it's just a matter of time. We've seen Disney and Starbucks, adopting Polygon as their blockchain of choice, for example. So it's coming. But I think unless you can go to like a proper business pitch, like if I'm a upstart Web3 company looking to raise funds from traditional finance to get that big money investment, they're not going to tolerate a avatar on a Zoom call as the introduction to who you are before they pitch over their funds. But on the other side of that, if I'm a corporate like a big corporation looking to get funding, You and I could probably go out and scrounge out $5 million worth of investment in a week or less, which is a tall ask for some of these, corporations looking to fund whatever project they happen to be. So we have something they want, but they're not comfortable interacting because of the situation that we're in right now, right? So
Yeah.
it's just going to take some change, right? Just take some time, let the industry mature a little bit, and let let trust outweigh the scams, because fuck the scammers. Honestly, I'm so
Yeah.
fucking done with these guys. Like,
Yeah.
just get out. Seriously, get out of the
Yeah.
space.
Dirtbags in the space, they give it a bad name, and they get lumped in with the guys who are really trying and maybe just fail on a project. But yeah, those people who just want a rug pull and everything, it's just terrible. I don't know how those people sleep at night. You rug pull, take somebody's money, hard-earned money. Like, if we're going to build a protocol, take a dev fee. The dev fee is your payment, man. Do your best, and if it doesn't work out, then you got to become a smarter developer so you can get more TVL, so you can get more developer fees. It's just, I don't know. I don't like dishonest people in general, or thieves in general. So, scum of the earth. So it's kind of, they're in every space. And like you said, this being decentralized or more anonymous allows more people to go, I don't even have to show my face. I'll just create a fake name, throw this protocol up, try to throw a bunch of marketing dollars out there, get a couple million in TVL, and then pull it and walk away. And yeah, I'm just not a big fan of it. And it just really does bad things for the space. What would be nice, what I would like to see before too long, and I don't know if this will happen because personalities don't always jive, but I would like to see some of these great developers in the space start to work together or figure out how to cross their projects over. You can create an LP of both tokens and farm it on someone's farm or what, just something to get the community wrapped around the idea that there are at least a core group of honest devs, and there's a core group of good projects that can last, and you're okay to move your money in and out of these, and then it will sort of wash out a lot of the other stuff. Right now we have a severe issue with tribalism in DeFi. People just picking a project and everyone else is the worst project ever, and it's also very much like a kid thing. It's very interesting to me to watch that. Like, I can't imagine a conversation where someone from Tesla and someone from Microsoft are just hating each other because one is invested in one and not the other. Just a weird, childish, idealism to me. So my hope is that people grow up and realize that it's okay that people invest in other projects, and just because they put some money over there, that money wouldn't make your project that much better. Like, people are just going to invest in whatever they want to invest in, and I'm hoping that people will grow up over the next couple of years and realize, like, okay, you pick the team you want to run with or the projects you want to run with. You hope everyone else makes money, and then if the stars align, some of those really good developers and teams collaborate in a way that'll make the whole space better. Because in the next 5 years, decentralized finance, NFTs are going to change the world, and there's going to be a core group of godfathers that really built the foundation that will be the future of DeFi. And we're talking both financial instruments like we're talking about, but also NFTs. NFTs are going to replace car deeds, your title, like, because you can't replicate that. So you got to have it. It shows that you didn't own it last I did. So there's no way you could sell it to someone else. Home deeds, all that type of stuff is going to transition over to an NFT model, because it will live on the blockchain, and then there was no way to replicate it or fake it. It just makes perfect sense to do that. So, in 5 years, totally new space. It'll be the common thing to see, some version of an NFT everywhere. Everything will live on the blockchain. That's where the data will be kept, because it's a nice trustless model, and you can see exactly where these transactions have been taking place. So
it's still,
I think
sorry, I didn't mean to step on you there, but it still blows my mind that we don't know where product is in a given spot of the supply chain at any moment when we have the technology to make that happen with ease, right?
with ease, yeah.
Yeah, but no, we still won't adopt it for reasons that remain unexplained. I love your idea of connecting dev teams, and it's actually something we talked about on this week's episode of the podcast, that people need a place to land when they get to crypto. And right now, you are absolutely right. It is crazy tribal, like, to a fault. because I think maximalists of any variety are kind of dangerous because they only see their way, and then they get in this echo chamber of confirmation bias, like this is the way, this is why we should be, and they try to convince you and their friends. And it's like, no, what are you talking about? It's this chain. And I'm like, no, scrap it. It's this space, and we're all trying to figure out who the winners and the losers are going to be. But that sort of connection and that lattice of projects that you're sort of envisioning could become the net that people land in. And it doesn't matter where they land on, they'll find the others because they're connected through some sort of, whether it's LP farms or it's a metaverse that they can split off from, like we were talking about with the team from Destiny World. Kind of, they had envisioned this idea of a shopping mall where, you know, they own the shopping mall, but there's a lot of different stores in the shopping mall, and you can go to them, and the stores are different projects, right? So you can just walk across here, but the community is an eclectic mix of all of the communities of those various stores. So I think we got to think bigger. And this is the thing, like every single time a dev launches a project, it feels like we're starting from scratch. It's like we learned nothing from the last, 5 years of development, right? So it's like, how do we take everything that we've learned and apply it in a better way, but not just this is the next project. It's like, no, this is the next ecosystem that's actually tied to that ecosystem, which has a partnership with that ecosystem. And we are one big DeFi, crypto, NFT, whatever it is, because there's utility across the board. Like there are so many dead NFT projects right now from last year that could be tied in with existing DeFi projects, and together they would be better, but they don't know who they are, and there's no connection point and no way really to connect them all.
Yeah. And I think part of the issue is just the trust, I think, between developers. But the nice thing is everything's in the code. So if you've got developers that are talented, they can spot check the code and realize, is it immutable? Are there backdoors? Is the partnership I'm going into going to be lucrative or not? You can do a more thorough job now via the blockchain than you could if you're merging with a business. And whether, hey, I'm going to merge with you, we're going to partner up, I'm looking at your financial statements and everything. There's just a lot of stuff that can be fudged. But in this case, it really can't be. It's all in the code. So if these developers can end up working together, then it'll be extremely helpful because they can cross-check each other's code. And then once they build that trust, they can start to build ecosystems together. And it doesn't have to be that every project they work on is like the same. It's like you said, it's just like the mall. The mall analogy is a great analogy. Just different stores in the mall. You want to get people in there, and then they can figure out what's the best place to shop, where's the best place to put their money, and give people a choice. But you're not in competition necessarily with the one next to you. I mean, the thing is if there's a Nike and a Foot Locker and they're right next door to each other, the likelihood is you're going to walk through both and see anything you like in there, right? And so if one doesn't have it, maybe the other does or whatever. But that's normal. You're not necessarily completely choosing one over the other. It's the products and services they offer in there, if that fits your needs the best. And some people are going to like basketball shoes, which they excel in, and some people are going to like running shoes, which the other one does. And so it's just two different product offerings that people still want to shop in both stores and not have one hating on the other. It's just it's an odd mix right now, but I think people will grow up over the next couple of years in this DeFi space, and we'll see something completely different come out during this bull run.
It forces sort of this idea of competitiveness too, because like, what happens if someone's got a 10% sell tax, but you've only got a 6% sell tax on a similar protocol? Well, that might be more attractive to me, and I might not have to adjust my sort of expectations. But this sort of underpins some of the issues that I've got with contracts in general is the fact that they automatically will renounce them if they want to be trusted. Mm-hmm. What if there's a flaw? Or what if the model doesn't work anymore? Or what if like literally 2 weeks after launch, you're like, man, I really wish we had just tweaked this because I saw what happened at launch and afterwards. And if we had edited the tokenomics in this way, then maybe we'd see better sustainability or adoption. And now I can't do that, right? So it's like, that goes back to the idea of trust and development and collaboration, right?
So what's interesting, and it's funny that you bring that up because I agree, and I saw this happen with the Furio project. So Furio, they came out and they left it to where they could make contract changes, and their intention was just to try to get it perfect over the first 6 months or so. and then lock it up and leave it alone, right? And there were some changes, and they had to change metrics and everything, and some people got really frustrated, and that's how it goes in DeFi. So I agree, like it would be nice in normal business, you have to pivot constantly. So I get it, like market things change or whatever, you got to make some changes. What I find really interesting was something Forex was talking about recently, saying that there's parts of the animal farm that aren't totally immutable. You can edit them, but if it's controlled by a third party that you have to go to, that you submit the code to, and it can't take effect any earlier than 48 hours. So everyone has a chance to see, oh, there's changes to the code, like they've opened a back door, or whatever it is. So it's the idea of using a trusted third party service to be able to hang on to the key for a limited amount of time. And then if a change ever needs to be made, or there's a community vote that, hey, we need to do this, they can send that to the third party, make the change. It takes a while to happen, so there's no instant rug pulls possible, and then that change is made. So I think the fact that he brought that up was interesting, and I would not be surprised if that ends up being the standard, because you're right. You see it, you're a month in, you're like, we made a mistake. I mean, if you've ever ran a business or really any project or anything, you realize a couple weeks in, you're like, yeah, man, I wish I would have known that now, because I would have tweaked this. There's just it's a constant array of pivots. And so I think in the DeFi space, this would be real nice if we could somehow combine those two aspects, keep it trustless, but also still be able to make some pivots if necessary.
Well, if you just go back to the beginning of our conversation about sort of the quality of our videos and just getting stuff done and getting it out there, can you imagine if the first version of a video that we released is the one we had to commit to for the rest of our careers? Like, it doesn't make any sense, right?
Yeah. Like, you got to be able to adapt. And there's certain levels to that. One is like, okay, well, you can build a layer 2 on top of that and improve upon it and make some tweaks. But yeah, you got to be. It's tough to be perfect the first time around, and there's always a way to do things better. And so having the ability to do that, and maybe it's like tied to a blockchain community vote. So if you're part of the project, however many tokens you own is your share vote, kind of like the pigs are at the animal farm, and then the vote has to win before it to give you access to make a submission. So the community's really deciding, something like that. I think there's a model there that will come to light that's feasible. I'm just not smart enough to know what that model is.
I think DAOs are kind of trying to solve some of that issue. The issue that I see with DAOs, and this is called the Rad DAO podcast, but mostly just because we're a collective of rad individuals, not because there's anything preventing anybody from getting in, is that the price of admission on, say, a token or an NFT-based DAO gets so high that you really are just getting such a narrow slice of the actual users of your ecosystem. So the people, while they are invested and they have a bigger financial investment, it's not really in the spirit of decentralized kind of authority, right? Everybody should have a say, so maybe there's a threshold, or maybe that token it's a stable, like at some fixed pegged price or something. Like, it just makes it tough. If I had to fork over 20K for a seat at a DAO table, I just can't do it, right? So then I have zero say in the network that I'm now participating in. So I don't know what the model is either, but someone will figure it out.
Yeah, for sure. I think someone will figure it out. It's an interesting topic, though. I'll make some notes and I'll think on it, but I'm not smart enough to come up with the right solution, but I enjoy the banter about it.
Well, I just want to comment on Furio. I'm running out of time now, but I respect Furio, and shout out to Frack and Famous, who's my boy. Yeah. I know they took a lot of shit for doing what they did. And for the audience that isn't invested, they had basically sort of created a range of prices that their token could be based on a liquidity management system. And then they made the decision to lower that by about 5x. So it looked like one disastrous candle on the chart. And then that's the range that the token was going to sit in. So basically, on paper, a lot of people lost a lot of money. But they did it for the longevity of the project, the sustainability of the project, and I can respect that. But I also understand why they took a ton of shit in the general community about the decision. So it's really hard. It's really hard to decide, okay, do you just let the market do its thing and run its course? Because Firo would be dead probably within the month if that was the case. Or do you move the goalposts a little bit down the road to give you time to develop what you're trying to develop, innovate, and then actually bring longer term value to your customers and your users? So I don't know. I don't know if that was the perfect answer either, but they're trying, right? And
Yeah.
that's better than nothing.
They're at least making an effort. And like you said, they just gave themselves a little bit of runway to hopefully come in with this Furo Finance, FureFi option to be able to extend the project out a little bit longer. And then it gave it time for the bot to catch up because they just happened to launch their bot at a tough time, and it took 2 months worth of losses before it turned around. So sometimes the market timing just doesn't work that well. My biggest frustration with the community is I can't stand how everyone jumps to the conclusion that the dev's dishonest or is a rug pull. Like, they clearly described exactly what they were going to do. The dev team is honest. They're not planning on doing anything shady. They really want this project to work. They're fully doxed, faces out there, super transparent. So I really like the Furo dev team, and I think they've got a chance to turn it around. They also realize we're in the middle of a bear market, and there's not going to be a lot of adoption right now. So for them, and I think they've made it fairly clear in some recent Medium articles, and when I've talked to them, they're just trying to tread water to get a little further through the bear market, keep the project sustainable, keep it running until we get a little bit better sentiment in the space. And then when they start releasing stuff, things can start to move its way back up. So, they made the contract immutable. There's a possibility that if everything goes well, it'll run out of the existing LMS funds and could swing to the upside. So there's at least that potential for the price to go back up at some point. It's a really challenging scenario, and another one that the slow rug people talk about. It's just a project that's struggling. It's not that the devs are dishonest or anything like that. We just got hit with pretty tough market conditions, as most projects have completely gone under, and they had to make a call, completely go under or try to buy ourselves some time. And so we can see if we can come out the other end of this thing. And
but if you look at it through the lens of traditional finance again, a business in that situation, they'd cut expenses, they'd probably cut payroll, they would decrease their forecasts for the analysts, and their stock price would go down. And that's essentially what happened here, right? Like, it's not a lot different than what people should be used to, but we get a little jumpy in crypto.
Yeah, for sure. No, I think you nailed it. It's exactly what we do in business. If we had a downturn, we'd have to make some changes, and it would be painful for a bit for all involved. But if it's going to last, then sometimes you got to plug the holes. Yeah.
Well, that's great. Well, we're going to wrap shortly, but one more question for you. I've learned all about Scott the investor, but who is Scott the man? When you turn off your screen, what kind of activities do you get up to?
So I'm on the screen a lot, unfortunately, with a lot of work.
You got to quit that, man. It's not good for you.
Yeah, I'm kind of addicted to the investing world. So that's a lot of I would say my hobbies a lot are more investing, but I love training in the gym. I have a 6-year-old son, so I got to keep him, occupied and everything. He's actually home from school today. So I gotta go up and entertain him. Like I said, we're going to do some Sudoku puzzles and stuff. He's just a super bright kid. But yeah, I just like to spend time with my family. I've got a nice house, so I've got to spend some time in the yard and all that type of stuff. I like to get outdoors. I live in Salt Lake City, Utah, so the mountains here are just wild. And so there's just a lot of stuff to do. So I've been out here for about 10 years, and there's still a lot of stuff I haven't got into. So I'm trying to learn all the spots and stuff like that all the locals know who grew up here. But yeah, it's just for me, it's a lot of family time, gym time, and then just a lot of work and investing mixed in. I like a lot of stuff, but I have a limited amount of time to squeeze it all in.
Oh, sounds like we're living parallel lives, man. So from one rad dad to another, you're killing it. So just keep at it. But thank you so much for coming on today. I had a blast. Such a good convo, man.
Yeah, appreciate it, man. I'll come back anytime.
Appreciate it. Take care.
Thanks, man.
Well, friends, that about does it for another episode of the Rad DAO podcast. Want to send a big thanks to Scott the Investor for coming on and sharing not only your personal story, but also your take on the market and where we can improve things to make it safer and more transparent for new crypto users entering the space now. If you like what Scott had to say, I would encourage you to subscribe to his YouTube channel or join his Telegram community. They're both great places to get content and engage with the people that surround him. One more time, if I could ask that you're subscribed to my YouTube channel, that you've smashed the like button, and if you're an audio listener, you've left me a 5-star review on your favorite podcast app, it would be most appreciated. With that, I hope you all have a wonderful week, and we'll do it all again in 7 days. But until then, keep it rad. Later, fam. The Rad DAO podcast is produced for entertainment and education purposes only. I know this because I'm not a licensed financial advisor. If you're thinking of investing in any of the tokens talked about during this episode, then I implore you to please do your own due diligence and, if necessary, consult with a licensed financial advisor.